Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, June 9th. It is 6:13 as I'm starting the video. Taking a quick look at futures. Equities are flat as a pancake. Oil is up just a little bit, but breaking through 70 yesterday and holding it thus far today. And we do have oil inventories at 10:30 this morning, so be ready for that if you're active in the oil trade. Gold is flat. Copper is down 1.21%. And I've noticed over the last several days, going into last week actually, copper being down overnight and then rallying during the U.S. session. Like yesterday, it was down 0.5%. And then it was up 0.5% during the day. So I don't know what's going on there. I don't know if it's China being involved in the Asian session or what. I know they've been trying to push down commodities, and copper is a big one for them. So I don't know what's going on there, but just something to watch. Yesterday we also had, there was a really strong 3-year bond auction yesterday at 1 o'clock, pushing yields down and TLT up. Today we've got a big one, 10-year bonds at 1 o'clock. So be ready for that. Even if you don't trade bonds, I mean, the bond yields have been falling. That hasn't really translated into the Qs rocketing higher. So, and don't forget, we've got the FOMC meeting next week as well. So the rates market has been kind of depressed here lately, sliding down from the high 160s down into the low 150s. So, and that's in the face of strong inflation information. So on the calendar, I mentioned oil at 10:30 and bond auction at 1 o'clock. Gold has been flat and has kind of lost the juice here in the last week or so. We had that real bad down day. It was down $40 last week, and then has recovered most of that, but still soggy. And I think we've got two catalysts in front of gold that will maybe chart the future direction for several weeks, if not longer. We've got the inflation print tomorrow, right? The CPI. Does that come in super hot? Anything could happen on that. And then the FOMC next week. So over the next week, we're going to have two big catalysts that could impact gold. And what you're looking for, or what would be bullish gold, is a falling real yield. What is that? It's the 10-year nominal yield, the yield that's actually being paid, minus the 10-year TIPS yield, the inflation protected yield. And the farther that goes negative, the more bullish it is for gold, because if your forward real yield is negative, that means you're losing buying power, along with a falling dollar is also bullish gold. So if you put all that in the mix, if you're a gold bull, you're looking for falling real yields and falling dollar, and that's going to be the catalyst to push it forward. So let's dive into this, going through the equities pretty quick. Not a lot going on. We've kind of been stuck in the narrow ranges. SPY 2-hour stuck here at the top. Really needs to pop this 422.75-ish level to break into higher ground, to get some blue sky territory and get some power behind it. I think until then, you're looking to buy the dips. I don't see anything majorly bearish, and I don't think there's going to be I think we're going to drift positive into the FOMC next week for the balance of this week. We do have that inflation number tomorrow, but the shocker was 30 days ago, right? When we got that hot print and everything went crazy. I think people are expecting a hot print now. So I think the reaction will be probably more muted than it was last time because, okay, we know inflation is out there. We know it's running hot. We know a year ago there was nothing going on. So it's base effects, da 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 da. So anyhow, I'd be a buyer of dips rather than selling rips right here, right now at this moment. So you've got the support levels here. You saw yesterday we had a dip down to test the top of that gap. What do we always say? The first touch of the gap usually holds, usually a good risk reward to buy that, and that ended up playing out yesterday as well. And here you see on the 30-minute chart that blown up level, the dip down here at 420.50. That's where the gap starts, and tag of that, then bounce back up. Notice also yesterday we had the fake breakout, right? Gap up above and then a quick fail. So if you were Johnny on the spot and caught that, I mean, you caught a pretty nice move. You got almost $3 out of it. So you would have had to been pretty sharp on that to catch that move. I think the easier trade was buying the touch of the gap. Moving on to the Qs, they've remained rather soggy, an upward bias, but more soggy. A key level is this 337. That was this breakdown candle area, and yesterday we had again the big gap up, reach up to this level 339.50. We had it on the chart, got the touch there, and immediate rejection, and came back down, and then stabilized towards the end of the day to basically close flat. I think 337 is your pivot. If you pop 337, I think you can be long. If you come back in here to 334.50, I would be a buyer there with a stop just below. I think the same as I said for SPY. I think try to buy the dips rather than selling the rips at this juncture. Keep in mind this open gap that's way down here. Going back to the active trading. Well, let's look at it on the 30-minute chart. I think this 334.25 level, that was a real important level back in here where it had trouble breaking through, and then it finally did and got a little upward momentum. I would be a buyer on back test. Like if you got a back test at 334.25, I would buy that with a stop just below. But if that failed, I think you'd be coming down here to 332. Like something would be different. Something will have changed if 334.25 doesn't hold, and that would be my flip point of okay, buying the dips isn't working. I'm gonna try a tactical short here and go for this $2 down to 332. And if there's really a problem, then this gap may fill, and then you got a bigger gap to 327. So as far as like a risk reward type thing, I think if this little breakout fails and you lose 334, then there could be some downside and potentially a lot of downside. So it would be good to be on the short side below 334, at least in my opinion. This is the real interesting one for me. IWM has been going like gangbusters, and you saw that yesterday. And I wanted to zoom out to the daily chart because I think it's really important here to understand where we're at. Since February, we've been in a $17 wide chop, consolidation range from, let's call it 212 to 230. We had a baby false breakout back here in March where we got to 234. We came back into the trading range. And remember what we always say, fake breakout back into the range, the target's the bottom of the box. We got that. We actually got it here as well. Little baby breakout, failed, bottom of the box. Now we've made our way back up to not only the top of the box, but have gotten a nominal breakout. Now I have the prior high at 234, and we're just below that. My point is, on a measured move basis, our target now, as long as price holds above 230, is 247, right? 17 wide, added on to the top of the breakout, 230 is 247. Now, I think the key is, do we break out above 234 and hold it? If we hold that, then we got blue sky above with no natural sellers. So I think this 234 level is going to be key. And just as important, if there's some kind of downdraft where we have a breakout like we did back here and then back into the box, it could be very, very bearish. So we gotta watch that. But as far as the indicators go, we've made an upswing now above the zero line on PPO, and we're back above on RSI. So from that standpoint, it looks good. Here on the 2-hour chart, I've got I dropped in a channel here on the 2-hour, and I think, as long as price stays within the channel, you will have pullbacks to the bottom and then runs to the top. But as long as it's in this channel, I think you got to stay bullish on IWM. And here on the 30-minute chart, there's the comparable channel. We're up towards the top, so we could easily make a tag of the top and then come back down to, a midpoint line, which would be down around 232, where we'd find support and keep grinding. Now, keep in mind, I think a lot of what is driving IWM, well, there's a bunch of things. Energy, financials, cyclicals, and now we got Reddit, right? Reddit hitting GameStop, AMC. Yesterday they were going for, what were they going for? Wendy's. All these junk names are in IWM, and they're starting to have an effect on the index, because when you got these laggards and now they double and triple, they're having an impact on the broader average that's contained, the components of the index. So I think that's an added effect. So IWM has been the strongest of the three indexes so far. Jumping into FATMAAN, Facebook had I'll call it a junk day, down most of the day. But the key is, all that has happened technically is a back test of the breakout. Here was the breakout. Now we got a back test. Right here is where it's got to hold. 332.25. If it holds that, bulls are in great shape. Breakout, back test, check, go. If it falls below, that would be kind of bearish, because that would mean that was a fake breakout, right? So got to hold right here. And if you're interested in Facebook long, I'd be a buyer right here with a stop just below. Of all the FATMAAN names, Facebook and Google have been the strongest, with probably Microsoft being third. But, Facebook has been strong. It's a nice move here. So I would expect this to hold. And but if it doesn't, that's what stops are for. Apple gapped higher with a probe above 128, but then falling right back. So today we've had this 126.50 on the chart for a while as being a level. I think as long as it holds that, it can make a run for 128, and then that for me is a big level because of all the things we talked about before. You've got converging 20 and 50 EMAs on the daily, and if it can break above that, I think that would be a great support level for a longer term type swing trade. But made a little progress here, going, stair stepping level by level. It hasn't been setting the world on fire, but it is and has been moving north. Tesla, big open, came up to 625 and then faded in the day. If you had been, long going into that, hopefully, that was an area where you could have trimmed whatever and then, buy back down towards the end of the day, maybe. I don't know. This has been tough trading. Bottom line is the same as the bottom line it's been for several days. 595 has to hold for bulls. If it doesn't, then back down here to the bottom of the box. But as long as it's above 595, the bulls can stay in business. Microsoft, gap open, touch of the bottom of the gap, and then faded the rest of the day back below 253. For me, you could actually move up this pivot point if you wanted to 253. I didn't do that, but looking at it here is probably the right place. If price recaptures 253, I'd be a buyer, and I'd look for a move back up to 256. If it doesn't hold, then this 251.75 layer will be support, and then you got support all the way down. But Microsoft has been on an upswing, but now it really has to recapture 253 to get on the right side of the short-term 1-hour chart. Otherwise, it's subject to backsliding. But as I like to say, this is why you draw the lines, right? This is why you draw the lines. We had the gap marked from 256 to 262. I mean, look at where it tagged. Look at where it tagged. I mean, right to that level. And if you've got that stuff on your chart, that's an important piece of information if you're actively trading this, that there's not many things more important on a chart than where are the gaps, because they act as natural magnets and support points along the way. So here was another example of that, where you got a run up to the gap and then it failed. Amazon had a nice day, cleared this 3250. I think you stay long and you look for 3300. If you're not in, you got to wait. Tough to take a position here in the middle. You got to hope for a back test of 3250 that holds, that you can get long and look for 3300. Otherwise, you got to wait for 3300 and then see if it can break out or if it gets rejected. But in the middle of the range, tough trade to take. Google, I've dropped in this channel. Maybe you'll find that helpful. But here we've got a layer at 2400. I'd like to see that hold. Otherwise, it's subject to pulling back to 2380. But above 2400, I think you look for 2430 and possibly even higher up towards to take out this all-time high back here and move higher. RSI still above 50. Same with the PPO above 0. Google's been one of the stronger names in the FATMAAN complex, so I would be leaning long. I would be looking to buy the dips in Google. Netflix, I think the only thing that's winning here is theta decay on your options, because this has been really tough trading. It's one thing to get the right levels, but on a $500 stock that's only moving $5 a day, it's hard to make money. So there hasn't been much of a directional bias in Netflix. So until it gets to a bottom of the box or breaks out, I just think it's tough trading. You can probably find better luck elsewhere. Semiconductors, really interesting day yesterday. Opened higher, got smacked down right out of the gate, and then came back down and actually filled this gap. We had the gap there down to 246, came right down to fill it, got a bounce, and so now to get back on track, semis need to break above 248.50, and I think that's your pivot point for today. You can see here, price has been kind of trapped in a range here for at least a week or so, having trouble breaking out. And, I would be watching semis. I think it's an important group, even if you're not actively trading it. If you see semis breaking out, doing better, that's going to be a positive sign for the market as a whole, but also the Qs in particular, big part of the Qs. So I think it's a good risk on, risk off type sentiment indicator. As we move on, I've got some chart requests from some subscribers I want to hit. But first, I want to go over this Fastly trade that we had. We had the bracket trade on the gap down. Price chopped around for a while, made its way up to the gap, got in, and for all intents and purposes, the gap is filled. That was a great trade. I caught it here 2 days ago, like right here, and so got most of this move. I closed out my position. Why? I had short dated calls, so any kind of hesitation or pullback today or in the days ahead would really hurt those short-term calls. Here we have the declining 50. Here's the top of the gap. Here's overhead resistance. So there's a lot of stuff that price needs to do in this name to grind higher and eventually break out. If you're still in it, just watch it close. And if you see a hesitation or a pullback, you can get out or reload, however the case may be. Now, if I start seeing a move this morning, breaking above, or if the market looks really strong and I see it going, I might get a couple of calls or something, but more or less, nothing too big, and see if it can, maybe get up to 60, 65, something like that. But the easy part of the trade is over. You either bought down here at the bottom of the bracket, or you bought on this breakout and then you got the quick gap fill. So that's how those bracket trades are supposed to work. And in this case, it was a good example of how it did work, and good trade. So congrats if you were in that. Okay, reader or subscriber request, Walmart. To me, Walmart is kind of stuck in the middle of a big range. When I'm looking at this chart, I lean heavily on the volume over price distribution, and you can see right here at 147-ish is the top of the distribution band, and I've marked the lower part of value down here at 134, and we're right in the middle. So, I mean, price has rolled over a little bit. It's testing the 50, and you've got volume over price support at 139. So, I mean, for me, if you want to be long against 139, I think that's fine. If you want to try a long against 140 at the 50 EMA, that's fine. But as far as bigger, faster moves, I don't really see it. I mean, we are in a nominal upswing. Momentum, although it's fading a little, is still above zero, so that's positive. RSI is just dipped down below 50, so, you know, that's not quite heading in the right direction. I think you're in Walmart if... It depends on why you're in it and what you want to do with it. It doesn't move particularly fast. You know, I think it's one of those retailers that just grinds away until there's some kind of big catalyst. You know, I think back here, the catalyst was their online program was getting a lot of buzz. And then once that happened, it was more or less sell the news. And, you know, I think Walmart is, you look at these big value bands, and if you can get price, you know, down into the 130s, or you get it even down like a 125, then you just park there for months and just wait for it to grind to the top of the band, you know, back up to 140, 145, and then you get rid of it unless you see there's some breakout. So I think this is a relative value kind of trade. I think if you wanted to be in something that's safe and, you know, has some yield to it, you're in Walmart. But it's not a name that I would typically trade. But there's nothing wrong with it. I don't see anything really bearish here. It just is a matter of time frame and what your objectives are. The next stock on the list is ticker MT. What is it? What is the name of that? ArcelorMittal steel stock, MT. But what I wanted to show you first is when I get a name, doesn't really matter what it is, I find the industry group. Now, I knew MT was a steel stock, so I have this chart already developed. This DJUSST is the industry group for steel. And here's the chart over a couple of years. You can see the really nice up channel that's going on in steel. And the reason I first take a look at the group is birds of a feather flock together. So if the steel industry group is going up, that's a positive, because that means that, you know, across the board, steel is bullish. So now we can take a look at the stocks within the steel group to see which ones we might want to put on the radar to pick up. So MT, I have here, and you can see it's been in a nice uptrend, and I've dropped the trend lines here. Right now we're back testing the 20 EMA and at the bottom of this channel. So right here is a good entry point. We're back testing the 20 and we're at trend line support. You could easily get long here with a stop just below, and then with the idea of moving to the top of the box. Let's look at the indicators. RSI, It's been above 50 for over a year. So big uptrend. Same thing in momentum. Above zero for over a year. Losing some steam. You can see this little downtrend here, but still above the zero line, indicating that it's in the bullish regime. Now, I want to show you something that I don't usually get into, but today I think it's interesting and kind of give you some insight into some tools that can help you select a stock. Down in the bottom panels, which are usually cut off on the video, and for the sake of time I don't go over, but I think it's important for you and your stock selection on things to consider. So I look at 3 relative strength graphs when I'm trying to size up a particular ticker. 1, I plot the stock versus SPY or SPX. It doesn't matter which one, just as long as you're kind of consistent. So MT versus SPY, nice uptrend, relative outperformance. That's what you want to see. What is the group doing? So I plot that group ticker, DJUSST, steel versus SPY, nice uptrend, right? That's what you want to be. And a stock that's outperforming, and a group within a group that's outperforming. And now you plot the stock versus the group. And here you see a downtrend. So what does that tell you? Tells you the ticker you've selected is outperforming SPY. The group is outperforming SPY, but the stock is underperforming the group. So what might that lead you to do? Well, you either come to the conclusion your stock is going to be in a catch-up mode to the rest of its peers, right, to catch up within the steel group, or it might prompt you to go to the steel group and look for a stock that's outperforming the group. So just from memory, Rio Tinto, BHP Billiton, Vale, US Steel. Those are 4 or 5 names in that group that you could go and do this same kind of analysis on to say, okay, comparing the charts, which one of the other ones might be better choices. I haven't done that, so I'm not going to say you ought to be in this or be in that. But I think it's instructive on how you can look at a particular stock and decide if you want to get in that one or not. But just on the face of it, I think steel is strong. I'm still a bull on resources, base materials, commodities, that kind of thing. So I like it. So thank you for the request. And the rest of you, if you have stocks you want me to go over, I will either do a separate video or try to work them into the morning video. Either way, I will get that done for you. And rest assured, if you've got questions about a stock, there's probably 20 other people that are interested in it too. So please send them my way, and I'll be happy to work them up for you. Okay, if you're new here, thanks for stopping by and listening. I hope you find the information helpful. If so, hit the subscribe button and the alarm bell. You'll get all my content sent your way. Check out the show notes. There's links to the blog site, etc., where you can get more information. A lot of articles there that'll be helpful to you as an aspiring trader. And of course, longtime subscribers, I really appreciate you being here with me. Please pass the link along and help me grow my channel. So this has been Chris Butts with Traders Profit Compass. Have a good trading day, and talk to you next time.